I just want to kind of add on to what Ray Dalio was saying. He ended it saying because wealth has to be sold to come up with the money to deliver whatever is needed, whether it's a bubble or not, basically saying that it might pressure some parts of the market. So let's just say we are in some type of bubble right now. What parts of the market do you see negatively impacted? Is it just other tech stocks that don't perform as well as some of the leaders? I mean, where do you see the weakness if we are in a bubble, and how should investors prepare?
Right. And so I think Ray actually intimated at this. The things that need liquidity, fresh sources of liquidity, are the things that are going to see the pressure first. And I think he's right that we're going to start to see those dislocations largely in the private equity world, in the venture capital world, where you'll have firms that need to support existing positions, even though those existing positions may no longer be long-term feasible. When you look at some of the SaaS companies, when you look at some other software and applications companies, have their position, have their function, will it be replaced by AI or some other technology? So I think that's where the dislocations will start, probably some places in the private credit space as well.
All right, fair to say it starts there. We've already seen some issues in the private credit space, but where does it, I guess, turn into an issue in the public markets? Where should public market investors be wary?
Right. So there are a number of factors that can cover this over, right? And so if we continue to see strong double-digit earnings growth, then the market at large is rather safe. And there's a number of reasons to think that we'll continue to see double-digit earnings growth into 2026 and beyond. The impact of the fiscal and monetary stimulus that we saw put in place last year, remember, we're going to see the peak impact of that in the middle through the end of next year. And so if the impact of those things, if the tailwind behind top-line growth, if the tailwind behind double-digit earnings growth on a broad spectrum continues to be very strong, then we'll largely probably miss those speed bumps of the dislocations on a broad spectrum.
All right, you said if we get double-digit earnings growth next year, it seems like you're pretty confident in that. You put out your S&P price target. One of the more bullish that we've seen compared to the other street price targets out there, you're at 7,500. So clearly you see strong earnings going in. You also seem to be pretty confident about the consumer. Goldman came out with some research this morning, or yesterday, excuse me, I thought was pretty interesting. They see real income increasing for middle and upper middle income consumers by 2.5%. So you're bullish on earnings. They're bullish on the consumer. How does that all read out into 2026? And is it a straight line, or are there some issues that you still see potentially coming up?
Right. And I want to make a distinction, Frank. I'm bullish on consumption. On the consumer, I'm rather mixed. And what I mean by that, and the distinction is that, you know, the top 10% of earners account for 50% of consumption. And so when we talk about the affordability crisis, it's real from a political standpoint. It's real from the impact that the plurality of voters are experiencing, which means it's important to the politicians. But in terms of earnings growth and GDP growth, again, the bottom third only account for 15% of consumption. So I don't know if this is as much an economic issue as a political issue. And so that and inflation will be political issues in 2026. It's hard for me to pinpoint a tailwind that's going to curtail growth outside of some shock we haven't seen.
All right, one other point. You say inflation is going to be an issue, not for the economy, but for the market. We got a cooler than expected PCE. What's the issue for the market? Because right now, that read has a lot of people feeling more confident about Fed rate cuts coming up this week, which seems to be a tailwind for the market.
Right. So inflation is going to be a political issue, not an economic issue next year, right? And so it will be intertwined with this idea of an affordability crisis, which we'll see front and center as we approach those midterms. But again, I think that that's more political than economic, unless we see the acceleration in inflation be meaningfully more than we've seen it thus far. But it will be headlines, and it will be front and center in all the political campaigns. And so we're going to see it time and time again. And because it affects a plurality of people, right, that bottom half of earners, this is going to be something that we can't avoid being centered from a political basis.